Good morning and welcome back once again to the Short Vol Show on YouTube Live. And welcome to all my friends from StockTwits and elsewhere in the VIX universe. And today, as we come into the trading day, let's take a quick look at the futures and where everything stands. So let's see. Currently, E-mini's down 9. Dow futures down about 100. NASDAQ down about 28. And this, of course, corresponds to a pop in the VIX. The VIX currently 1367, up about 56 cents, leading to also the VIX futures being up. The front month up 47 cents to 1470. Second month up 34 cents to 1557, as you kind of see the curve flatten a little bit with the pop here. Okay, now I wanted to address something because, and if you're new here, this will give you sort of an insight into the kind of the way I see things. If you follow me a lot, then just kind of bear with me here because you probably heard me talk about this before. But I was posting on some spots that I don't usually post over the last day or two. This one called vertical, I think it's called like vertical options spread, something like that. It's a Facebook group. And this guy that runs this is really cool. Vertical spread option trading. Vertical spread options trading. And it's run by this guy named Eric O'Rourke, who's really cool and has his own YouTube videos. Check him out. Shout out to Eric O'Rourke. And I started posting about a VXX trade on there, saying, well, you know, I put this trade on VXX to get short the VIX. And I got the reception, which I get from actually a lot of people all the time, which is basically a feeling that they kind of read in the tea leaves that the VIX term structure is flattening out, and there's evidence that there could be a big spike very shortly. And like I said, I get that all the time from people, and especially people who haven't come in contact with me before, if I mention, if I have the idea of shorting the VIX, they come back at me with, well, this is not a good time, X, Y, or Z is happening. A lot of people right now will say, oh, well, the midterms are happening, and therefore this is not a good time. It could spike at any moment. And they may be, all these people may be right. It could, nobody knows what the future will bring. I certainly don't, and nobody else does either. However, when we're looking at doing trades that have the best probability of success, we have to kind of try to think about what happens most of the time. And most of the time, the market doesn't crash. Most of the time, it's a false alarm. These things pop and they come back down. And that's what happens most of the time. Now, sure, this could be the one time that doesn't happen and people warn against it. But generally, if you're going to go about with a strategy, if you're going to commit to a strategy of shorting the VIX, then and you're going to try to do this based on initiating a position when things pop, then you're going to face a situation at some point where everybody appears to be getting long this stuff. The VIX is popped. Everybody seems to think that this is going to continue to the upside. Nobody seems to be shorting it at that moment. The VIX is at higher levels. It's in the middle of a spike. And if you kind of just look at what people's advice is at that one particular moment on social media, everybody is going to be saying to buy it. And that's just kind of the nature of things. As we know, most of these spikes just fizzle out after like a day or less than a day. We look at the VIX here. I'm going to pull up the VIX, and we see these like little mini spike, this little mini spike activity. Which, am I in the way? No, you can see it here. The chart next to me, and what I'm going to do is I'm going to blow this up a little bit because I like playing around with my little charts here, so that you can see a little bit better. Okay, so you see, this is the VIX over the last year. You see many little mini spikes, and we are indeed in a little mini spike right now. Now, I don't know if this spike's going to go higher, but we are not on the lows right this second. We are in a little mini spike, VIX 1371. So, yeah, there's going to be more people with the VIX at 1371, during the spike. There's going to be more people up here saying you should not short the VIX than there would have been down here when it's sort of trending down, nothing's going on. When it's trending down, nothing's going on, a lot of people are going to be into shorting the VIX. But when you get a spike like right now, a lot of people on social media are going to be telling you, look, this is not a good time to be doing this. This time could be different or is different. And don't get caught up in what people around you are saying. This is like one of the big things that it's even more of a stark thing when you're actually on the floor trading, because you're surrounded by action, you're surrounded by people, and you need to focus in on what you're doing and ignore what other people are doing. Now, you can't have total blinders on because you need to be paying attention to what the E-minis are doing, other stocks are doing. What you need to be looking at your screens and seeing what's going on, but at the same time, be aware that when we get a VIX spike, all the people on social media all of a sudden turn into bulls, and they're all going to be saying, the bulls come out of the woodwork, and they're going to be saying, "This is great. I'm making money. It's going higher. This is it. Here we go. Get on board. I bought it way lower." They'll be congratulating themselves, and it feels like it's going to feel like the wrong time to be initiating a short if you're just paying attention to the social media around you. And I suggest at times that you isolate yourself from the social media around you and just focus on what you're seeing and what you're doing, because you might get taken off track if you don't. Somebody could be right. This could be the big one. I don't know. You don't know. But the odds, the higher probability play is that this pop is going to fizzle and go lower. And the time to initiate a short is when we get one of these pops. It's not when we're down at the bottom there. Yeah, you could initiate when things are down lower, and eventually contango and other forces are going to make that into a winner. But easier to start out right out of the gates with initiating a position on a pop and getting a little down move in the next day or two, so that you're almost immediately in the green, and your break even or stop losses are farther away. So today is a perfect example. Stuff is popped. E-minis down. Now, I like to look at the charts of the major indices, because in the end, the VIX is based on the major indices, and so what they're doing is ultimately going to be important for you. So let's take a look at the E-minis right now. I'm going to realign my screen here, and I'm going to move over here. Okay, and we see this is I believe it's a 180-day chart, and we see that we're in the middle of an uptrend here. Yeah, it's backed off a little bit in the last week, but we're still right in the middle of an uptrend. There's a little down move, but it could very easily be nothing. And if this trend continues, which when you see a trend like this, it's more than likely that it's going to continue. It's more likely that it's going to continue than it is likely that it's going to reverse and turn lower. And so if you're kind of want to do the easier thing is to stay with the trend. The easier thing is to do the higher probability trade. And yes, some people do take the long shot trade and make money on that, but it's harder to time. And over many occurrences, you might be right once or twice, but if you're trading all the time, you're not going to be right all the time. In fact, you're not going to be right a lot of the time. And if you're doing a long shot, you're going to be wrong most of the time, because remember, the more occurrences, the more times that you execute a trade, the closer to the actual odds your results are going to be. So, you flip a coin once, you're going to be 100% either heads or tails. You flip it twice, it's very easy to get 2 heads or 2 tails, but you flip it 1,000 times, you're going to get closer to 50-50 percentages. And it works the same way with trading. And so if you're doing most of your trades that are the higher probability trades, you're going to be winning most of the time. If you do most of your trades that are long shots, you're going to be losing most of the time. So, that's why I don't advocate people buying like scratch tickets, because those are long shot trades. So if you do more and more of those, you're going to be losing more and more of the time. Okay, so what would I recommend for a trade in the VIX, and what do I think of the midterms? Because a lot of people are anxious about the midterms elections, and I think understandably so. And people are afraid that we're going to get a big spike in volatility then, and that's certainly possible. So what do you do? Do you just wait between now and then and don't do anything? One possible strategy, which I was outlining with somebody this morning, was to put a very small short on and wait and just play it very, very small. Some people are kind of getting long the VIX in one way or another right now, anticipating a move higher before the midterms. I generally don't advocate getting long the VIX because, as I said before, it's a kind of a lower probability of success. I will either lay off or be short, but you might want to lay off for a little bit. That might be a good strategy. Let's take a look at contango for a second here. People, if you want to follow somebody who's good at picking trades for the VIX, check out Michael Listman on Twitter. Now, he does a lot of higher probability trades. For example, he will do a put spread trade where he is selling the at the money strike and buying a much higher strike. So, for example, in VXX right now, and I'm not going to put words in his mouth, so let's just outline a strategy. In VXX right now, you might consider doing something like the putting on something like November, with 72 days to go. You might think of putting on something like the November 33.30 put vertical. Now, all that has to happen is VXX just has to stay kind of where it is now or lower for this trade to be a winner. And you know that you've got contango of like 5% pulling you down. So this trade is a fairly conservative trade, buying the November 33 puts, let's say for 685 here on the screen, and selling the November 30 puts. And let's say you buy the put spread for 228. It can ultimately be worth $3. Contango of 5% means that that VXX, all things being equal, is going to go down, over $1.50 a month. So if you've got 2 months out and all you need it to be is lower than it is now, that's a fairly safe bet, because volatility can expand a little bit even, and you're still going to be a winner. This is the sort of trade that that you could put on conservatively, make decent money over a couple months, and have a limited risk, because all you're risking is the amount you pay for this. If there's a huge spike and it stays higher, you're going to lose $200 a trade, but at least you know that that's the maximum you can lose. For me, I would probably do a little bit more aggressive trade than this, maybe something like the 30-27 spread. So you're buying the 30 put, you're selling the 27 put. So you're paying $2 to make $1, basically, or $1.96 to make a buck. So you're making a higher return, but you have a little bit more risk. You need things to kind of pull down a little bit further. And if you can put trades on and make like 20% in 2 months, and you can just consistently put that trade on over time, you're going to make a lot of money. It takes a little patience, and it takes, discipline. And, you know, trading can't be exciting every day. You don't need to be swinging stuff around every day and taking risk every day, because guaranteed, if you start swinging stuff around every day, you're going to end up having a much more volatile P&L than if you just are disciplined, have a disciplined strategy that makes a reasonable amount of money, and you keep putting it on over and over again. A trade that's, you know, taking advantage of harvesting contango, something like buying one of these put spreads and letting it play out till expiration. If you make several of these trades, you know, kind of vary your strikes, vary your months, and just keep putting them on over and over again, you can make a great living doing that. So that's something you might want to look at. I post videos about about putting trades on VXX all the time. I will be focused a lot more on UVXY after September 18th when it officially splits. UVXY right now trading 872. All right, so let's go for a second to... so the answer to the question of the title is, this is not the big one. Hi, Mark. Hi, James. Nice to see you, fellas, always. And I'm going to let you guys go as we are going to be approaching the opening of the markets in the U.S. here today. And just to tease it a little bit, check out Mark Chapman's activities. He has a revolutionary idea that he's working on right now, and there'll be more of that to come on this channel coming up very soon. So stay tuned for that. And thanks for watching, everybody, today, and I will see you in the next one. Good luck trading today, and keep selling that VIX. Keep making your money. More of that to come on this channel coming up very soon. So stay tuned for that. And thanks for watching, everybody.